Hey guys, welcome back to Data Driven Value, where we show you the tools and teach you the skills to help you take your financial freedom into your own hands. So jumping back into the educational side of things, today I'm going to break down how I identify trends in the market, and more importantly, how to spot trend reversals, which tools we might find useful. So whether you're trading stocks, crypto, or Forex, knowing when to enter and exit positions is going to be the difference between profit and loss. Stick around, I'm going to show you the tools that I use to spot trend reversals and how I avoid being caught on the wrong end of a sustained downtrend, as well as how I position myself for upcoming kind of trend reversals or uptrends. So first of all, we need to define what a market trend is. So markets do not move straight up or down. Basically, they're going to show general price action over time on the charts. We will show you that over here. So we just flip to our chart here. We do see this is the price action. The blue line is the SPY, and then we've just got two other lines here. Those are our moving averages. So this is one of the tools that's going to be really useful for helping to identify kind of a macro uptrend or downtrend. The two moving averages you're going to be looking at are going to be your 50-day moving average and your 200-day moving average. So our orange line here is our 50-day moving average, and our green line is our 200-day moving average. You can essentially see when the blue line, so the price action of the SPY, is above both the 50-day and the 200-day moving average curling up, we're generally in that uptrend, and that shows no sign of slowing down really. So we really want to position ourselves for these uptrends. So we look for those times where we start to see price get above both of those moving averages and really push to the upside. And then kind of looking at through the history of the SPY, you can see right up here, this is where that 50-day crossed back below the 200-day, and then our price action of the SPY also crossed below those two moving averages. That signaled the start of a sustained downtrend. That was about a 46% retracement in the stock market. So if you're able to kind of get out of this position up here once we saw that first sign of weakness, then you don't have to sit through the remainder of this downtrend. You're going to save more capital, and you're going to be able to take more advantage when the trend does reverse to the upside again. You're going to have more cash available to buy the asset at the lows, rather than getting aggressive up here. These are warning signals, so this is when we either de-risk or take profits. It depends on your strategy. And then down here is obviously where we're going to want to be buying right as we see this bullish price action kind of around the moving averages and the SPY here. Same thing again, gets back above that 50-day, 200-day, holding it as support. Another beautiful rally here. But then again, guys, we see we lost it again here, and then that was another sustained downtrend, 52% correction in the stock market. So you see how each time we kind of broke below, back tested this as support, it was rejected, and we just continued down from there. As long as we're under these two moving averages, that's bearish price action in my opinion, and it makes more sense to either de-risk some of your riskier positions, or sometimes it makes sense to just cut a position and not experience that sustained downtrend. Again, your strategy is going to be different to everyone else's, but again, we can use this as a signal to tell us, hey look, we're back below these moving averages, they're acting as resistance. We're likely just due for some more consolidation. We're not going to go in a big breakout move without kind of those signals from these indicators. So again, here we would have seen right here we've crossed back above. This is a great signal to enter the market. You didn't catch the bottom, but it doesn't matter because look at this trend following, guys, just up and to the right. So that's what I tell you. You don't need to time top or bottom perfectly. You just need to time trends, not even perfectly, but pretty well. You want to get in near the bottom of the trend, and you want to exit near the top of the trend. It's that simple. Again, by trying to time top or bottom exactly, you're just going to drive yourself crazy. You're going to end up buying falling knives. You're going to buy resistance. You're not going to have that confirmation on the charts that I always talk about. So again, when I talk about confirmation, I'm talking about confirmation of trend. So I want to make sure when we're in an uptrend, we're maintaining those higher highs, higher low structure. And then when we're in a downtrend, we're watching for those lower highs and lower low structure to give us those signals, whether we want to de-risk, whether we want to exit that market and let the trend kind of play out. That's kind of going to be a case-to-case basis. But again, you can see on the SPY, right now we are holding above these two moving averages. So just for price action in the near term, it looks fine. Again, as long as we hold these, if you start to see the SPY curl over, lose the 50-day as support, then we're going to have to test the 200-day here. And then again, if we curled back under, lost the 200-day and the 50-day, we would be looking at a potential kind of downtrend in the near term future, or not even the near term future. Again, these can play out over years, guys. So again, we're just watching it, and if we do break below, then that's our signal that there is weakness and we may be due for a downtrend in the near future. So getting into some more real world examples, this is the Bitcoin chart. I just want to show you here. So basically this was the top of the prior cycle, and then we came down, and this is really where we reversed our price action here. So we put in that lower high, that lower low, and that third data point right here. So another lower high. When I talk about confirmation, I want to see at least 3 data points. So again, the lower low, lower high, lower low, lower high. So we now have confirmation that we are likely in a continued downtrend. If you cut your position here, I know it sucks not selling at the top, but again, you cut your position, and if you positioned yourself at the start of the uptrend for the bull market, you're still doing really well. You're still in a lot of profit. So we see here, if we cut this trade here, we avoid a potential another 70% retracement. You know, if you held on to it hoping that we're going to reverse and go higher, then you kind of just ate another 70% loss on that position. So sometimes it does make sense to cut a position or de-risk some of your other riskier positions. And if you do get confirmation or signals of that downtrend, you see we came down here, bottomed in the bear market, and this is where we started to reverse our price action. So you see we put in higher high, higher low, higher high. So this is 3 data points, but we don't buy into resistance. So on an uptrend, I like to wait for that 4th data point, 2 higher highs and 2 higher lows. That's great confirmation of a likely continued uptrend. We enter right here, and you see where price moved from there up 201%. So even just by entering here, you didn't catch the bottom, but you still made a 2x move in a pretty short time span here. You see, if we come in, this is where again we start to reverse that price action. So right here, this is a lower high, lower low, lower high, lower low. So this again, technical downtrend, waiting for it to bottom before we start. You know, you're not buying right down here yet, and we're again waiting for that reversal price action before we start to get aggressive, because this could just continue breaking down and come back down to these lows. So we're not going to risk getting caught on that breakdown. Instead, we want to wait for confirmation of the continued uptrend. We enter, and then we ride that wave to the next highs. You see here, higher high, higher low, higher high, and then that's our 4th data point for that second higher low. And look, another 62% move up to the new highs. So again, if you can capture this trend here, just by using those tools, you're going to do really good in the long run and be able to capitalize on these trends. And these kind of returns are amazing. Like, you're not making the absolute maximum return from low to peak, but again, very few traders are able to actually accurately and consistently time top and bottom. So I'm not trying to time top and bottom. I'm just trying to time trends, because I have kind of figured out that we can really take advantage of this and compound those gains on the long time frame here. So right now we're in a technical uptrend for now. This can play out a couple ways. So either this is kind of the more bearish path. If we do put in that lower high, we're risking kind of trend. And then, so if we put in this lower high, watch to see if we put in a subsequent lower low and then another lower high, this is going to be our confirmation of a likely breakdown, in which case we want to de-risk the majority of our positions because we're expecting a further breakdown to lower support. Alternatively, we could see price breakout, take out these highs, maintain that higher high, higher low structure, in which case this is the entry right here that we'd be looking at for that confirmation and continued push to the upside. So really pay attention to kind of the different price action. I tried to break it down just with arrows to make it a little bit simpler. Flipping over, there are other tools we can use. I'm going to get into and show you some examples to kind of identify the different trends. So this is generally just basic higher high, higher low structure that we're looking for. We can also use, this is our chart pattern cheat sheet. So generally, you'll see these different patterns appearing on charts, and I'll show you a couple examples in a second here. We do see, if we flip over to Bitcoin, so the one I'm going to point out right here is this bullish flag pattern. If we flip over to our Bitcoin chart here, essentially, we had this uptrend here, and then we went into a bull flag consolidation or a sideways consolidation period right through here. So again, technical downtrend. We're not interested in kind of getting too aggressive aggressive because it could break down further. And then we see right here, this was a bullish divergence on the price and RSI here. So a bullish divergence can signal an upcoming trend reversal. We did notice the bullish divergence. We saw here, we noticed an uptick in volume. So volume, another one you want to see on these moves, you want to see the buying volume increasing to the upside. And then same, if you're looking at a rejection move or kind of a reversal to the downside, you're going to see a lot of sellers coming in and kind of less buyers. So right here, we saw selling kind of slowed down right through here, and then we just had a little consolidation period here, you know, people acquiring their positions, and then we saw the volume really come in here, get that breakout move up to new highs, and we see here, this is where we reversed the trend structure. So we got in higher high, higher low, higher high, fourth higher low, that's the entry, and we're moving up in there in that trade. You can also see there was a key level of support here broken. Actually, key level of resistance, sorry, from the prior cycle. So again, another thing you want to pay attention to, key levels of support and resistance. We're going to show you a few different ways to kind of identify those, but you do see this is that bull flag pattern. So getting back into kind of our, price action patterns here. You will have access to this cheat sheet again. It's in my technical analysis guide for you to reference. We can see bullish continuation patterns, bearish continuation patterns, bullish reversal patterns, and bearish reversal patterns. So when we see these on the chart, these patterns, really look at the price action around it. Look for that higher high, higher low structure. Look for those key levels of support if it's either reclaimed that, or those key levels of resistance it might be rejecting at. And then also pay attention to the volume. Make sure that it kind of supports that thesis. So we can also use indicators like the RSI and the MACD. These are momentum indicators. I use these all the time to tell whether an asset is overbought or oversold. So if an asset is overbought, generally it's due for a little bit of a healthy pullback. In the least, we're going to see some retracement. And similarly, if we're oversold, we're likely due for a bit of a bounce, a bit of kind of buying to return to the asset. You know, things can remain oversold or overbought for extended periods of time, so we don't put all our weight into a single indicator. We want to see confluence across multiple indicators as well as our price action and our different patterns. So we can continue on here. Flipping over, looking at candlestick patterns is another one you're going to want to pay attention to, because candles can give us an idea of what is likely at. So we come down to a key level of support and we see a bullish single pattern candle print there. That's going to be a good sign. If we have a bullish candle printing at key support and we have our momentum indicators stacked in our favor, as well as that uptrend structure, then we're likely to just reverse there or continue on. Alternatively, same on the other side, the bearish, if we're we're in an uptrend, we hit key resistance, put in one of these bearish single candle pattern sticks, and then end up in a bit of a bearish pattern here. So bearish reversal, like a double top, triple top, head and shoulders, that kind of thing. That's going to be your signal that, we're losing momentum. That might be the potential top, and we might be due for a reversal. So just pay attention to that. The other thing I'll talk about is bearish and bullish divergence. So essentially, divergence is going to signal an upcoming trend change in terms of regular divergence, and a hidden divergence signals continuation. So I'll show you here. We saw regular divergence here with the RSI and the price action here, and that signaled that the likely trend reversal was coming, which is what we saw here. We got our confirmation, and we're able to ride that to new highs. And then here, this is actually a hidden bullish divergence as well. So hidden divergences typically signal continuation. So I'm kind of leaning towards we are maybe likely to get another little push up here. Whether we're able to take out these highs or not is going to be kind of a wait and see type thing. Again, I want to see us break those highs, come back. So if we see something like this, then that's bullish continuation. Likely we're going to continue higher, but we do have the potential to break down as well. There's always that potential. We lose this and we just end up in that downtrend structure, coming back to test lower areas of support. So again, that's why we just wait. We're patient. This is kind of no man's land. So you see, this is just a range that Bitcoin's trading in right now, similar to this downsloping range. This is all just no man's land. We're not trading this because the likelihood of it breaking down or up is kind of similar. So again, no man's land. Wait for that confirmation, higher high, higher low, enter on that higher low, and ride that trend up from there. So moving over, we'll take a look at kind of another tool I like to use Fibonacci levels, they're going to be, again, a really good tool to help you kind of identify likely areas of reversal. So generally, you're looking at the golden zone Fibonacci's. That's between the 618 and the 786 Fibonacci level here. You pull it from the swing low to the swing high of the current rally, and then once it's played out, you move on to the next rally. So essentially, this one came up, came back to the 618. That Fibonacci retracement has played out. You enter here, and then we ride the trend up. We come back to our Fibonacci level. You buy in here. We ride the trend up. You buy in here, and then you see how just time and time again, this Fibonacci golden zone acts as support and acts as a reversal. So confluence of support is going to be a very big factor here. So I'll show you on the WGMI chart, looking here at kind of the various macro lows throughout the cycle. We do obviously see the RSI, MACD both oversold with bullish setups here. Same across all three macro lows. Look at that, RSI oversold, MACD oversold, and the DMI, we've got that bullish setup on the DMI as well. So yeah, again, when I talk about confluence of support, we see we're coming into the Fibonacci zone of support. We're coming into our upsloping trend line of support. We've got volume supporting our thesis, and we've got our momentum indicators all supporting our thesis of a likely upcoming reversal. So by utilizing kind of all these tools together, you're really able to get a better idea of what's going on in the markets, be able to tell heavy areas of support and resistance, as well as recognize that weakness when the trend starts to change, and then de-risk or kind of get yourself out of those positions if that's your strategy. But that's kind of it for today. We're going to do a lot more of these little educational videos on the weekends. You know, weekends aren't good times to trade crypto, and obviously the stock market is closed. It's a great time to reset before the week, you know, or do some learning, that kind of thing. Always trying to expand our knowledge so that we're prepared for the week when it does come. And then we, just look at the charts and we follow the data, nothing else. We're patient, and then we position ourselves as it kind of makes sense and the trends really show us the potential direction in the near term. So thank you guys so much for watching. I also want to say a big thank you. Just broke 100 subscribers, so thank you so much for all the support. I want to keep bringing you guys the best content I can, so feel free to drop requests if you have specific videos you want, certain charts or assets you want me to look at. Definitely drop them in the comments below. Otherwise, I'll see you guys in the next one.